Good morning, Mark Soderberg with ADM Investor Services with your morning ag update. Mostly higher trade across the ag space overnight as we approach the morning pause. Corn right now is 4 cents higher. Soybean prices 6 to 7 better. Mixed trade in the wheat up 3 to 4 in Chicago and Kansas City, steady to a penny lower in Minneapolis. And in the bean products, just fractionally lower right now in the meal, while bean oil prices are up 70 to 75 points. Both corn and soybean ratings did fall 1% to 67% and 63% respectively here in the past week. In corn, the declines were pretty widespread. 12 states reported lower ratings, while only 4 states showed some improvement. Conditions did hold steady in 2 states. Since peaking in early July, ratings have been on a pretty steady downtrend, however, still remain at their highest level since 2018. The updated acres, conditions, along with the ear population data from Friday's USDA report, to me would suggest an average yield of 183.3 bushels an acre. That's a fair amount below the USDA forecast last week at 183.7. 85% of the crop is dented, while 41% is mature, both in line with recent history. Harvest progress at 7%. That does match the 5-year average, however, just shy of the 8% pace from a year ago. The decline in ratings in beans are also pretty widespread. 14 states showing lower ratings, improvements in only 3, while 1 state did hold steady. With the updated ratings, conditions, along with the pod count data from Friday's USDA report, my model would suggest an average yield here in the U.S. at 53.7 bushels an acre. That's above the USDA forecast of 53.5. By my count, 75% of the states that do report pod count data were at record levels for the month of September. 41% of the crop is dropping leaves. That's in line with recent history. Harvest progress reported at 5%. Just below a year ago at 6%, however, above the 5-year average of 3%. I think beans and oil are also drawing support still from yesterday's NOPA crush report. NOPA members in August, they processed just under 190 million bushels of beans. That was well above expectations and also above the range of estimates. Although crush was still off 3% from July, it was up a whopping 20% from August a year ago. But despite the crush being so far above expectations, bean oil stocks did slip 9.7% from July to 1.245 billion pounds. That was below expectations. Implied crush now for the month of August, I would have it at about 198 million bushels. That would bring final crush for 24-25 to 2.445 billion, 15 million bushels above the current USDA forecast. Weather-wise, too much above normal temperatures to hold across much of the central Midwest here through the end of the month. Heavy rain in the western Corn Belt this week will slow crop maturation and early harvest efforts. Some rains look to extend into the central Midwest by the end of the week, mostly dry for the eastern Corn Belt. D's corn back challenging its 100-day moving average at 427. Next resistance is last week's high at 430.25. It appears to me the trade is leaning towards lower U.S. production in future USDA reports. Corn demand, however, will need to stay strong to reach the high pace outlined here by the USDA. Yesterday, Nov Beans did reject trade back above that 1050 level. We'll see if we can make another push above that here today. The resistance above that, last month's high at 1062.75. President Trump is expected to speak with President Xi later this week, hopefully with a meet in person here this fall. Quiet trade in the wheat. We did see U.S. winter wheat plantings reach 11%, while spring wheat harvest is nearing the finish line, 94% complete. Thanks for listening, everyone. Have a great day.